You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns that show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. In today's video, I want to speak about EURUSD. Now, why do I want to speak about EURUSD? Because at the moment we have quite interesting price action. The market has also created exactly the move that we wanted to see from our previous analysis. So let's see what kind of situation we have and how we can be looking to capitalize on the next potential move. And as usual, I will be keeping the analysis as educational as possible. So first, we will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probabilities for a nice trading opportunity on the pair. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we can see that at the moment, the market is breaking above a very important structure area. In fact, this zone here was acting as very strong previous resistance. The market then broke above the zone, and at that point, as you know, previous resistance is turned support. However, the market failed in respecting this area as a new support, broke to the downside, then broke back above, creating this monthly close above the structure. And at that point, the previous resistance was once again turned support here. In fact, the market tested the new support and started this rejection to the upside. And we can expect the market to provide even more continuation to the upside, breaking above the previous high and printing a higher high. Going down on the weekly time frame, what do we have? Now here on the weekly, all structure is currently bullish. We can see how the market has just broken two very important weekly structure areas and already retested them and started rejecting them to the upside. In fact, we can see how this area was acting as strong resistance here. We then had the break to the upside, and as you know, in the market, previous resistance, once it is broken to the upside, is turned support. The market tested the support here and started this rejection to the upside. At that point, you have a new structure area, which is this previous resistance, which the market broke to the upside with this candle. And at that point, previous resistances turned support, and the market just tested and started to reject this zone to the upside once again. So currently what is happening here on the weekly is that we are rejecting previous resistance turned support with a quite sharp move to the upside. So also here on the weekly, everything seems quite bullish, and we can expect the market to provide more continuation to the upside. Just a quick thing, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily time frame, what do we have? Now here on the daily, I have spoken about EURUSD quite a few times in the past. I spoke about it after the creation of this M pattern. From here, I made a full breakdown explaining all the reasons for which, first, we wanted to see the move to the upside to complete the pattern at this previous support and resistance, and then we expected the market to provide the move to the downside and create a lower low. And again, that is exactly what the market did. Then we had the creation of this W formation, and from here I made another breakdown explaining all the reasons for which we expected the market to provide this move to the downside. And once again, that is exactly what the market did. And from here I made another breakdown explaining all the reasons for which from here we expected the market to provide this move to the upside. And once again, that is exactly what the market did. And by the way, I will link in description all this previous analysis so you can go and check it out for further reference and more free education. But at the moment, what do we have and how we can be looking for the next potential opportunity? Now, at the moment here on the daily, we are breaking above a quite strong structure area. In fact, from here, the market had started all this move to the downside, confirming this area as extremely strong supply and resistance. However, at the moment, the market is trying to break above this structure. Now, we still have 10 hours to go. before this daily candle here will close. But if we will have a successful break and close above this structure, then all this previous resistance will be turned support here. And after the break, if the market will go for a retest, from here there is definitely the possibility to be looking for a potential continuation to the upside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are doing in the market, we can see that lately with the last reports, net positions have been increasing. In fact, we went from having 66.8k net positions all the way up to having 93k net positions. So definitely a strong increase with 16.9k longs added with the last report. Now, keep in mind that if you're checking the data for the euro, you're actually checking the data for EURUSD because all currencies on the spot are traded against the USD. So clearly EURUSD is getting quite bullish also from an institutional perspective, so basically non-commercial perspective. So we can expect the market to provide more continuation to the upside. And how we will be approaching this potential longing opportunity with students. Now, very important to keep in mind that after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And what we can see if we do that is that we have the 0.382 of the Fibonacci taken on the daily impulse, which is currently lining up with this previous resistance turn support, creating a confluence of support at this area. Yet we do expect the market to test before a potential rejection to the upside. So the way in which we will be approaching it is, as usual, being reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So if the market will provide a correction inside of this zone, inside of this confluence of support area, this is exactly where we will be monitoring price action with students from a 4-hour perspective and lower waiting for the market to shift from a 4-hour and lower bearish market as we will have to a 4-hour and lower bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding EURUSD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside and creation of a higher high. If you enjoyed the video, make sure that you smash that like button and comment below. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. In fact, every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And we also have a daily Q&A session in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.